All right, now to our first conversation to discuss the performance of Nigeria's capital market. We have Mr. Olatunde Amolegbe, President, Chartered Institute of Stockbrokers. Great to have you. Good morning.
Thank you, Ladi, for having me. I'm happy to be here.
Oh, yes, on a Friday morning, you gave us your time. Well, what are the key, highlights, of the performance of the NGX Limited in 2021 for you?
I believe the NGX did pretty well last year. Obviously, the sort of returns we saw last year was not as bullish as what we saw in 2020, but was still pretty good. 6.1% on the broad index, the ASI. But like I always say, the ASI does not necessarily tell the whole story. If you dig deeper, the more specific index, such as the NGX growth index, showed returns in excess of 28%. So, meaning that investors that are in that sector of the market, were able to beat inflation by a long mile. So, all in all, it was a good year for the NGX, and investors in the market.
Yes, not a bad one. But, aside from the key statistics, what other major milestones did the NGX cross last year as a newly demutualized exchange?
The demutualization itself was a good one. It shows that the NGX is moving in the right direction, that, exchanges generally are moving. So we have the exchange itself also listed, on its own platform, and they are able to do a few things that they've not done. They would typically have not been done as a company limited by guarantee. So that's a good one. I think that with the fact that we were able to hold the first digital IPO in the market was a big deal. It was one that we at the CIS has always championed, and we supported the NGX in that. It was pretty successful.
Yes, and I also heard women participation was high with that.
Oh yeah, which is very good. I mean, this is the sort of inclusiveness and increased participation we have also sought across genders, across demography, and across the type of investors we like to attend towards the market. The truth of the matter is that prior to the digital offer, the average age of investors in this market was probably in the region of 50. You will agree with me that 50 is not exactly a young age. We need a country like Nigeria that has a relatively large youth population. We need more of those youths to start coming into the capital market. So to see the number of women that have participated in that offer, the number of youths that have participated in that offer, gives us a sign of progress in the market, and a sign that the future is looking bright for the Nigerian capital market.
I know we keep talking about attracting millennials to the capital market. Tell us about what your institute is doing regarding this.
The truth of the matter is that the millennials are actually participating in the capital market, but they are just not participating in the sort of numbers we expect for them to participate in Nigeria here. We know that with the hubs, with the global hubs that are available now, they are able to buy stocks, internationally. With the digital offer, we see that the interest in the local firms, if the good firms come into the market, is there. What the CIS is trying to do is to tap into that by increasing, financial literacy across various platforms, through schools, through digital platforms, through the social media. So we're trying to get the youths, to get to know more about the capital market here in Nigeria. We have a relatively sophisticated market here. They could, that could enable them accumulate savings and put those savings into into profitable investments. Beyond them participating as investors, we will also need them to also come in as practitioners in this industry. We need youths to get interested in becoming securities and investment practitioners. So that is why we are collaborating with some universities now to float bachelor's degree in securities and investment. So school leavers could now go into universities and graduate with bachelor's degree in securities and investment, and that could serve as a pipeline to them coming into the profession. Secondly, we also realized that the time it takes to actually become an omnibus stockbroker could be relatively long, and because of that, we've broken down the qualification into specialization, such that if a young man's interest, for instance, is in the equities market, they can come to the institute and specialize in that. If the interest, for instance, is in fixed income, they can specialize in that, and they can, take the course, do the tuition, and then pass the exams and become a player in the market in a relatively short period. So those are sort of the things we are doing. Of course, we have also ensured that we made it easier to actually take our examinations. So, for instance, you cannot take our exam on a remote basis. So if you are living in Canada, you are living in the US, you are living in Britain, you do not need to come all the way to Lagos to take our exams. You can take it from the comfort of your bedroom, as a matter of fact. So, we've done all of that so that we meet the youths where they reside, which is in the social media, on the internet, and in the comfort of wherever they have, because they do not want to go through the hassles of having to move from one point to the other to get what they want to do done. All right, so we have leverage on technology, we leverage on the knowledge we have to try and ensure that we get more of the youths interested in the profession, both as investors and professionals.
Yes, and we know, there's a relationship between the capital market and, economic growth. But what are your recommendations to the government, to help, tap into what the capital market can actually do in helping to revamp the economy?
I know that the government has been doing quite a bit, by raising bonds in the capital markets in order to carry out some of the objectives. But I also note that the National Development Plan, the 5-year National Development Plan, emphasizes the development of infrastructure, the creation of employment, and tackling climate change. If the bulk of those activities surrounding those key policy areas can be financed through the capital market. And we've seen it. We've seen that the capital market has capacity and the innovation necessary to be able to finance those programs. I mean, the last sukuk that was issued by the government in December was oversubscribed 8 times. That's an indication of the capacity that this capital market has. So if the government works with the players in the market and good innovation is brought to bear, the capital market can provide significant financial outlets for government to achieve its objective under the 5-year development plan. So, for instance, I expect that the pace at which privatization is going on should be wrapped up. It seems to have tapered a little bit in recent years. They should wrap that up. The commercialization and privatization of other entities, such as the power sector, such as the petroleum sector, some of those could come through the capital market, and I know that if that happens, not only will it develop the capital market, it will also help the government meet its funding objectives in an efficient and costly manner.
Quite interesting.
Cost-effective manner. Pardon my language.
Okay, so give us some, insights, into what investors and shareholders, can expect from the Nigeria's capital market in 2022.
Well, 2022 is shaping up to be a very interesting year indeed. we see the NGX have already done close to 10% gain this year. We think that the prospect for further gains and growth is there. If all things being equal, if we are able to achieve relatively stable macroeconomic policy, if the security situation in the country improves, if we are able to put in more, if the security situation in the country improves, if the forex situation also improves, that could also attract some of the FPIs that might have left the market. If the electioneering campaign we are going into, is conducted in a relatively peaceful manner, all right, and if we continue to recover from the impact of COVID, God forbid we do not go into another round of relapse of COVID. If all these factors work in our favor, then we are likely to see a very good year in 2022 for the capital market. We've already started seeing the green shoots of that. The corporate results that have been released recently have been quite impressive. And I think that, as long as consumer demand continues to grow, capacity continue to grow for in the companies too, and they continue to do well, then there's no reason why the stock market should not have a blockbuster year.
Right,
I also feel that some of the steps that has been taken by the NGX itself are also very positive. Trying to attract the fintechs to come to the market is a good move. Launching the derivative market is also a very good move. So all of these issues combined, if they work positively for the market, should let the market end the year in a very positive territory.
Right. Talking about ending positive territory, we've seen inflation rise globally, and we anticipate further rise this year. Which sectors of the economy would you say investors should take position to hedge against inflation?
There are sectors, specific sectors that at least have shown in recent years to be sort of immune to inflation, because the companies in those sectors have a relatively better capacity to pass along increased costs to their customers. So the telecom sector, for instance, we know is a fast-growing sector. It's a sector that has the capacity to be able to beat inflation. The consumer goods sector, has also shown over the years a capacity to be able to withstand inflation, because the ability to pass on cost is much better in that sector. I will also argue that the cement sector, where demand in Nigeria at least appears to be relatively inelastic, also has a better capacity to be able to withstand inflationary pressures. So, off the top of my head, those are the sectors I can mention now. I will encourage your viewers and investors generally to talk to their stockbrokers more closely about details of the companies and the industries that has the capacity to withstand inflationary pressures.
Yeah, quite interesting, because 2022 is shaping out to be the year of inflation, the way it's looking. But let me get your, briefly, now let me get your perspective on the plan by the SEC to revisit the capital market 10-year development plan. Briefly.
I think it's good timing to do that. The capital market, the existing capital market plan, I've run for a while now, and I think that a lot of the objectives that are itemized in that plan has been realized, But the world is changing rapidly, and it keeps changing. I think that it is important that the capital market also change with it. But what I've said initially is that the new plan that is being planned must ensure that the capital market there's increased efficiency across board in the capital market, either regarding timing, either regarding operational efficiency, either requiring regarding pricing efficiency generally on the financial market. So it has to increase efficiency across board, across all metrics in the capital market. And if that happens, what the result of that will be increased competitiveness, because obviously the world is a global market. Investors will direct their money towards the markets that guarantees them the best return for their risk. And so those barriers, those country barriers, essentially do not exist anymore. So our capital markets also needs to be as efficient as any other in the world in order for us to attract capital, either locally or international. So if we're efficient across all these metrics, competitiveness will increase, and we should be able to achieve the objective of the new capital markets master plan.
Okay, thank you so much, Mr. Olatunde Omolegbe, President, Chartered Institute of Stockbrokers. Thank you so much for coming on the program, and enjoy the weekend.
My pleasure, Ladi. Thanks for having me.
Thank you.